Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, for weeks, traders were just trying to find out what type of volatility was implied in S&P, Dow, NASDAQ options. What was the VIX inferring leading up to the election with just a risk of not knowing what was going to happen? Well, today I think we found out. When you look at the volatility surface, again, that's a combination of term structure and skew. We had a severe downward shift in that early this morning. That tells me that the VIX was basically holding about a 50-cent premium for the last 2 to 3 weeks due to the election, and basically that all came out today. Case in point, look at it this way. The S&Ps on the open within the first hour today were down about 2%. However, on the other side, the VIX was only up 1 point. That's telling me that the risk premium came out today. The VIX should have been much, much higher than it was. Why does that matter? First, it matters because if you want to trade volatility, you need to trade volatility. If you want to trade price, you need to trade price. Secondly, it's important to recognize that on the year, the low on the VIX is 13.45. With the risk premium that was embedded in the VIX over the past 2 to 3 weeks, I would suggest that the new low for the VIX was actually 12.95. Really strange stuff going on in the S&Ps today. I just thought that skew would be all over the map, but really nothing trading, a lot of two-way paper. The 13 to 13.5 zone really stayed very, very steady all day long, with paper not doing a whole lot of anything that's significant, anything that changed the narrative. Going on to FX. FX, another story that's hard to believe, but FX vol basically flat on the day, except for the case of Canadian dollar and Australian dollar. We saw some significant bidding in both of them, largely due to the fact that they're linked so heavily to the commodities space. Now, oil is a completely different story. Oil vol up about 2 points on the day, largely due to the fact that oil did hit that support of $85 a barrel, and right now is trading below that, a significant point. Vol's up 2 points on the day. Agricultural vol, when you look at corn, soybeans, wheat, even live cattle and hogs, all volatility's up, a little bit smaller than most everything else that would be up today. However, that vol has been trending lower the last couple weeks and now is higher. Lastly, gold. Gold's been the red-headed stepchild for weeks. Gold vol down 1 point on the day. Keep in mind that gold vol has been moving higher for the past week, week and a half, when everything else was moving lower. Gold up about 1 point on the day. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.